What's going on, guys? Welcome back to another YouTube video. So we're on the eve of CPI, and this is obviously a very big important print because this print tomorrow is 0.8% lower than the expectation. What that means there again, folks, is this is the biggest change in expectations this entire cycle. Yes, that's right. We know the cycle started with the phrase transitory no more. We have obviously seen this massive rally on inflation, and inflation is coming off rapid, really coming off quickly. And there again, this is purely because of demand destruction. When you have high interest rates, that is going to affect spending, it's going to affect growth overall, and we have seen that filter through into the likes of ISM that we had last week, printing in at 46. We have seen inflation obviously massively cooling. And we've also seen the labor market slowly starting to worsen as the JOLTS job openings last week showed around 600,000 less vacancies available in the labor market. So the question now remains, is this going to, really cause the Fed to pause? Right? Bitcoin back above 30K at the time of shooting this video. Is this the bull run? Is this the end of the bear market? Is this the end of everything? And is everything yet to stay? So I'm going to cover that in this video. Let's jump straight behind the charts and cover what the fuck's going on. Right, guys, if you're new to the channel, I do start on the dollar. Dollar does give us everything. It gives us the narrative. It gives us what is truly happening in the market at that time. Our job is to simply jump on the back of it. So yesterday, a nice little rally on Monday, Easter Monday, as markets reopened. We did have that follow through of dollar, more than likely the repricing of Friday's expectations, because over Easter there was so many countries shut, so many markets closed, that market expectation, that market flow from NFP, I feel, was priced in yesterday. So we had a nice little lift on NFP, on the dollar, which there again gave us a sell-off in risk, a sell-off in the Dow at the time. The Dow obviously stretching for the highs at the moment. NASDAQ still peaching in and around this area of consolidation, along with the S&P up at the highs. I'm going to run through the S&P shortly because I am in a position in the S&P, roughly pretty much where the risk reward is on this chart over here. I broke this down this morning for my traders in my mentorship. So I do favor the S&P lower at some point. So I'm going to run through that in this video. So dollar, it's not really about, what it is. It's about where it is. 102 is a very big level for the pair. However, as I just mentioned, really looking at, investing.com, I want to show you CPI for tomorrow. Let's really just cover this quickly. There we go. So CPI year over year expected at 5.2%. I'm going to go ahead and click on that, folks. And I'm really going to run through, the ramifications of this, where it has been. It was at 40-year highs in inflation. We did hit the high of 9.1, and we are rapidly cooling off, right? Levels of inflation not seen in 40 years. Now, I really want to cover the quicker things rise, the quicker they're going to fall. Right, the quicker things rise, the quicker they're going to fall. And I really want to just touch up on the fact of why inflation was where it was in the first place. Over 40% of all dollars in history was printed over the pandemic. 40%, that's right. So if you really look at this, obviously all that free money that was given over the pandemic was spent, right? It was clearly spent. So looking at that money's come to an end, right? It's really come to an end. And I think the ramifications of that, are really going to start to price in, but it hasn't yet, right? It hasn't yet. You look at equities, you look at risk, still stretching for the highs, when personally I think that's a mistake, right? I am still a bear on risk. I am still a bear on equities. I do feel despite a Fed pause coming, despite a Fed rate cut coming, we are going to see further downside in equities. The bottom is not in equities, and that's my personal point of view, unless, right, data shows us otherwise, unless we start seeing growth pick up. If growth really starts showing some signs of strength with a tight labor market, I might be on the contrary belief that, because China's reopening, partnering up with Russia, looking at 5% GDP, really ramping up things in that end of the spectrum, we could see a further rally in risk. But I'm still of the belief that we are going to see some downside. Looking at how inflation has been cooling month after month, we want to ask ourselves why. If the Federal Reserve rose interest rates more aggressively than they ever have in history over this cycle, of course you're going to have that price into inflation. Of course, the economy is really going to feel it. And I don't think it's felt it yet. And I really do think there is a lag. And that lag can really be witnessed in the price of most of things. Right? So inflation cooling off, expected the lowest drop in expectation since this cycle. Right? Since this cycle. So since the maturity of these rates, since the maturity of inflation, this is the biggest drop in the expectation. Does the market actually print at that price? We don't know. Or at that figure? We don't know. Or we don't. So, purely expectation, purely speculative. But me really looking at the markets, it is then about identifying whether or not I favor dollar at this price. Whether I favor dollar at this price and whether I think we are going to have a higher dollar despite inflation cooling. Now, despite inflation cooling, right, you may have the Fed or the market pricing the Fed pause, which intraday, like intra-week, will give you a weak dollar. But you really want to zoom out and look at what that means for risk. Right? Look at what that means for risk. Because if we do have that follow through there, folks, there really is some trouble in the water. So me looking at dollar, I do expect some sort of a reaction around 102. I would not be surprised if we go ahead and we beat the expectation that we do have, a bit of a lift on dollar. Right, bit of a lift on dollar. If we miss expectation and print any worse, oh my gosh, strap your seatbelt in because, we're going to see 101. 101 on the dollar index, if not even 100. To finish off the week into next week, if that is the case. If inflation prints, and it could happen that inflation comes out as expected and dollar still tanks, right? It is not an environment where you can see risk higher for longer. Yes, a print in line with expectations may supplement a intraday rally in risk, but it is not an environment where you're going to see and going to expect this to continue and really hold. So we want to think about that for a second. So the S&P 500, I am short on this currently from current market price, pretty much 41.15. I like it from where it is. I do favor it up at these highs. I have been short in the S&P this whole year so far. I've had about 4 trades on the way down over here since the peak in about early January, February. I have been shorting it since then, since we broke to the downside. We obviously can really identify something that has been happening in risk and in the S&P. Every dip is getting bought, right? If every dip is getting bought, we want to ask ourselves, what is actually going on here? So for me right now, I have had some successes in the S&P early this year, but I'm not going to go ahead and get too greedy. I'm not going to get too big for my boots and, start trying to overtrade and over risk and really just think this is my pair and I'm never going to lose, because we know that will happen very, very quickly. So for me personally, I am in one small position now, right? Risking 0.5% of my account on this trade. 50 points stop should the market stop me out. That is the price where I will be losing 0.5%. Oh, sorry there, Einstein. So how am I going to trade this? I do obviously see on the 1 hour time frame, we have bounced several times out of this area of support, right? So I would like to obviously make it very clear that we have had some bullish divergence here. We have broken to the upside, right? If you look at this rally that we had, start of the month, end of March, start of April, we had this overextended rally, right? As markets were pricing in this Fed pause. Right? There is nothing showing us, this demand. There is no demand, right? Something to also factor in. China, Russia really getting into bed together. Could this be people piling their money into risk because they no longer trust the dollar? Maybe, right? Maybe. Same thing, same reason why Bitcoin's rallying, same reason why gold's above $2,000 an ounce. People are looking for that alternative, right? People are looking for that alternative. So how I will trade this is pretty much from where it is. Should we crack this level, I'm going to put a number on it, 40.70. Should we crack that level, then obviously I'd be adding risk to this trade with a retest of that range. This can really be seen on a 4-hour. You can see how strong this level is. But you can also see why I'm only looking to add to that once we break, because, you know, the same trade happened over here at 40.50. I was short on 40.50 actually while I was in South Africa at the time in March, where we broke through this level. We retested 40.50 and a beautiful follow through. I wish I held that, but I actually didn't. I got out at 39.85, roughly around there. So looking at current market price, I favor it from where it is. I favor that break. I favor that retest. Should we continue? However, I would obviously like to remind you that should we have this big miss in inflation, right? As I just mentioned, should we have that miss, then we could see a brief intraday rally in risk, right? We could see it, right? Could stop me out. I'm happy to take that risk from the current market price. So that's pretty much my view. Gold, nice little intraday short yesterday. I was pretty much happy with, let's delete that, pretty much happy with where it was at the time. I gave it in my group. I'll put the screenshot somewhere around this video. Beautiful little intraday short there. I'm happy with how it played out, especially on the lower time frames. If we'll briefly take a look at that. A good little scenario of a trend continuation. I did spot that shift in the dollar at the time. I spot, the contagion into risk. I spot the return in risk. So gold, there again, had to follow through. So a nice little reversal on the lower time frames. And yeah, beautiful little follow through, really. Looking at gold, current market price, something I did mention. So I'll be giving it on, fair game. I do like it from where it is. Long term, I understand the fact that people are looking for the alternative. I understand that, there is that sense of fear and that sense of concern with the current banking system. And I would suggest, buying dips. Buying dips. I had this fib drawn on earlier, but I personally didn't get in. Just not in the mood right now to trade gold. Gold is a bit of a bitch if you trade it intraday. I'm sure those of you watching, if you have traded gold, you understand. I would much rather trade indices than FX, right? Something that's less volatile, something that's going to do my head in less often. And it also allows me to keep the money that I make. And that's a bit of a psychological hack for me. I really want to double down on things that make me money instead of over leverage, over risk on things that cost you money. Right? If it's costing you money, you're wasting your time. If you're just trading it for the sake of it, stop trading, or stop trading that instrument. Stop trading for a while. Take a break if you're just trading for the sake of it. But if you really want to double down on your skill set, find what works for you. Right? Everyone is a different person. Everyone is individual in their mindset, in their edge, in how patient they're willing to be, how risk averse they actually are, and a lot of that boils down to what type of person you are. So you really look at yourself and figure yourself out before you try and trade high volatile instruments, because it's really going to catch up to you. But on the contrary, I still love gold. Right, gold is my first true love along with pound yen. Won't forget that one. So yeah, should we see a bit of a retest into 2000, and should inflation miss the expectation or come out worse, then you are going to have this rally on gold. But I would obviously like to be the contrarian that I am and just suggest that as an investor, as a trader, you want to be looking on both sides of the fence to preserve your capital, but also get you 2 steps ahead. And you really want to look at the other side of the fence for a second and say, if inflation does beat expectation and a surprise to the upside, then do expect a sell-off and a rollover in risk. So you could see anything along the lines of this big sell-off, right? Wouldn't surprise me at all if it happened. However, it also wouldn't surprise me if we do get that lower time frame retest to 2000, and then it's off to the races and we do see higher pricing. Brief little look at Bitcoin while we are. Bitcoin popped its head above 30,000, so almost 100% from the lows. You're really looking at that. It was a nice little accumulation from the previous high. Was the FTX drama and the FTX scandal, was that the cause for the last shakeout? right? We don't know. We don't really know. Something I did mention, I did favor, was another retest of the lows. I did like this sort of price action, to buy these dips should the market have come back into these lows. We didn't really get there, right? I'm a long-term believer on BTC. I do think that with this whole banking contagion and the whole fear with the system really failing, crypto is that escape, right? Crypto is that escape. Crypto is the escape of not having your money stuck in a bank, having full custody of your funds. Is that the alternative, right? I think it is. $200 billion worth of market cap has increased over the past couple of weeks. So we are now sitting at a total market cap of 1.2 trillion. My analysis obviously marked out. I did expect a bit of a leg lower, but it's not about your analysis, right? It doesn't have to always play out as planned. You go ahead and extend this to the high, something that, only hindsight really helps you with. We reacted beautifully off that high, right? $750 billion market cap, and we bounced off to the races. So looking at Bitcoin, I would say, should, we really have this economic wobble, two things are going to happen, right? Two things. Either full capitulation in risk, broad market, washout, absolutely everything. Second scenario, there is going to be that alternative. That alternative could more than likely be gold, and it could more than likely be Bitcoin and crypto. So we are approaching a massive, massive level at 35K. Right, massive level. In and around 32, right, 32 to 35.5. There's a very, very big technical level. There is still bearish divergence. The same, if you look at the price action, very similar to what I showed you on gold. You want to look on both sides of the fence here for a second and say, what would cause a full capitulation lower? What would cause, us to really have that last attempt at the lows? Because, people get into the honeymoon phase when they start seeing all these green candles, or in my case, blue, right? People start getting excited. People start over leveraging. People start throwing all that they have after the run. It's a bit late, right? It's a bit late. So you want to ask yourself, right? What would cause, the distrust in crypto to have that full capitulation? Because, things fall very quickly. Things fall quicker than they rise. So I'm not spreading FUD. I'm not spreading anything, right? But if there is further interrogations into Binance and they find anything, just be careful, right? Be careful. Binance is a lot bigger than we think, right? It's not a good thing for the crypto market. I see a lot of people on Twitter, spreading FUD and, really going in CZ, but be careful, right? That's a big thing for the overall market should that happen. So it's things you want to think about, right? It's things you want to think about. Don't put all your eggs in one basket, but it is obviously a train that you can't afford to miss, right? You can't afford to miss it. You have all your money in a bank thinking it's safe forever. Well, folks, right? 2023 was an example that you don't know, right? You just don't know, right? You don't know. You got your money in your bank. You think it's safe. You just don't know. Right? You just don't know. So, yeah, if you're still watching, I respect that. See you rocking. I'm rocking my Life is Bullish cap. It's going to be dropping very, very soon. I do have a trader meetup on the 22nd of April, which is roughly about 10 days away, which I'm super excited about. So look out on the channel for a video on that. I'm going to be dropping a full YouTube video of the event, of the meetup. And then I'm also going to be launching the store on that day. It is going to be limited. These caps are going to be limited before I drop some more. So make sure you grab one, or make sure you grab a hoodie, my Life is Bullish hoodie. And just stay focused, stay patient. Do like, comment, share, subscribe. Drop a comment below on what you want to see on the channel. And I'm going to try to start vlogging soon. Right, I ordered myself some stuff from Amazon. Should be arriving in the next couple of days. I want to try to start vlogging, show you more of what I do on a daily basis, and bring some more personality to this channel instead of just market updates, market rundown. So that's pretty much it for me right now. Have a good day. Trade safe tomorrow, right? Trade safe tomorrow. Live to fight another day. And also remember, you are only as good as your last trade. So keep that in mind, folks. Hope you have a good one. See you on the next video. Take care. Bye-bye.